All the FTech traders and to the wider investment community. Doing my weekly trading roadmap for the week starting the 15th of June 2015. And we're going to be going through some of the event-driven risks that we're seeing this week. It's actually, in my opinion, quite a busy week. Just um, obviously, we're going to have to figure out how we're going to manage our risk and money in order for us to take full advantage of those opportunities, and the bulk of those coming in the middle to the end of the week. So let's kick this off. Monday, we don't have really much going on. Um, we've got the U.S. Empire Manufacturing, the U.S. Industrial Production. That's pretty much what we have on the data front. From a central bank policy perspective, we've got a few speakers out of the ECB: Novotny, Weidmann, Pret, Draghi, and Cohn speaking. So keep an eye out on any of those, especially Draghi, because he is the big boss of the ECB. From a geopolitical standpoint now, as some of these comments are starting to heat up the markets a little bit, so keep an eye out. We've got Dijsselbloem speaking, Vestager, and the Belgium Finman Overtveld on the Greek crisis speaking in Berlin. So just keep an eye out on those three speakers, just because recently we've been seeing quite a bit of volatility off of comments, but just mind you, uh, make sure that those comments are solid comments that actually make a difference, and be wary of some of the comments that are getting a little bit fatigued, such as um, uh, Greece. Uh, there wouldn't be such a big deal if Greece left the eurozone, or looking at Plan B, or some of these comments have just been really fatigued, and the market isn't actually moving as such to those. So just be aware of those. Obviously, if we do get anything concrete, anything really concrete, not from the Greeks, because we've heard the Greeks basically say we're inches away from a deal for months now. If we get something concrete from Disselbloom, Schobel, or someone that is on the other side, the creditor side, then you know, then you should be looking to potentially get some size on the buy in your equities, your BTPs. Euro, I think, is a massive gray area, so not so much. Selling bunds. Those are the trades that seem to have been working. But like I said, Euro USD, be careful. That's a very gray area for me. Last week we saw on uh, negative comments surrounding the Greek situation, the euro was actually positive and actually moving higher as the European equities and BTPs were getting smacked. So beware of that. That could be just something just to be cautious from. Coming into the week, let me just take a look at the two main markets that I trade, particularly the Eurostoxx and the Bunds. If we take a look at the Eurostoxx, first of all, there's not really much I want to go through on. Is a 60-minute time frame chart. You saw that we had a bit of a bid last week after we failed to move lower. A bit of a bid all the way up into this region. We had found a bit of resistance near this trend line that's been holding. You can see here since that swing high that we made of the year. Going back, it seems to have been holding. We kind of found a bit of resistance there. So looking out to see if we find some more resistance in that area if we get up there. But at the minute, it looks like we've come back and we're quite happily nestled in here. I think this week is roll period for the European equities, so just watch out for that. That could be just a reason not to dabble too much in these markets this week. We've nestled quite carefully. The hitting comments might be a little bit different as well, so just be wary of that. That could obviously change some of the trade. Some of the levels that obviously I'm looking at are 35.12s in here. So a bit of a swing in here. We've left a little bit of low volume here, which I'll show you on the market profile. These 35.28s have been really key. Last week we saw that was the weekly value area low of the previous week, and we kept rotating about it. Every time we held above it, we were seeing decent bids. Every time we broke solidly below it, that's where we actually found a decent offer. And I think I'll show you in the market profile this week. We actually have quite an interesting area there again. So if we take a look at the weekly market profile, just bear in mind around these 35.26s, we've got the weekly value area high. And obviously this is CQG, and my weekly value area lows of this week, we're actually at 28s, like I just said, but this was showing me 32s. So I've got 26s here. I've got to wait until I get back into the office because I'm recording this from home um, to see what my market delta says. But I'm looking nonetheless between this area, 26s to 32s, to see if this is somewhat of an inflection point. What I am looking at in this region, we've got a few more TPOs in here and a lot less volume and value in here. So I'm looking potentially if we do move up here and find an offer for this to fill in a little bit. Potentially if we are going to find our way and kind of repair some of this profile, because it seems we've got a bit of, from last week we've got, this value zone, this value zone, and then this value. So it's almost like um, a triple bell curve profile. So, you know, in terms of how to trade this, if we're staying within the value area of the previous week and we're seeing clear rejections off of this point, I'll possibly be looking not for this to move aggressively to the downside, but maybe repair a little bit of this and then trickle down, effectively repair a little bit of this. And then you're ultimately looking to see if we can sustain a bid above this value area high at a value area low at 34.22s. Now in the interim, you do have that key swing low which we made weeks back here at 34.41, which came in just in here. So just beware of that level. If we do get back down there, possibly we could find a bit of a bid there. And then I do like these 34.62s in here. It's very low volume node, a couple of swing highs and lows in this area. So just bear in mind those 34.62s look pretty juicy. And then of course, whether we actually do make our way and fill this in, it's going to, have a lot to do if we can hold an offer below these 34.82s, which is the weekly VPOC of last week. So the highest volume traded node of last week comes in at 34.82. And ultimately, I'm looking once we offer through there and close, potentially for this to rotate and test these 62s. So this is pretty much the way I'm looking at this profile this week. I'm not looking for any extensive moves unless we are getting some sort of news. If we do get some positive news and we're holding above this area, I do see scope for us to test, all the way up into these regions. We've got these 35.98s, which is that weekly value area high of that other week, and coupled with that really key inflection point up until these that selling tail at 36.09s, 36.10s. That's a pretty key inflection point for me. So really, even though if we do get above these 35.98s, I really want to see the market start building value in this selling tail area, because this has been a pretty key rejection for me. The market really does need to come in here and show an initiative to build value here, because if it doesn't and we leave another tail, well, then that's looking really bearish for me, just short term, and I'd probably be looking for that to come and rotate back down into this value zone. Right, so that's how the Eurostoxx is kind of shaping up this week. Like I said, I believe it's rollover week, so just beware. Take it easy. Don't get too carried away. Then we've got, looking over at the Bunds, look real quickly at the 60-minute chart and take a look at what we did last week. As we noted last week, we did, I think we did complete a pretty nice 5-wave structure. We were talking about it from the beginning of this move. We had that first wave up, second wave down. We had a nice deep retracement, a third wave, which is usually the biggest wave in a wave structure. We've got a fourth wave, which had a bit of a retracement, and then finally that fifth wave to the upside. So potentially now, being as it looks like it has sort of finished that, I'm looking to see what the price action is in here. Possibly we could get a bit of corrective price action after this move higher. I am looking at this trend line in here. If we do break below that, I do think we could see just a little bit of an offer back into these areas in here, and potentially if we do offer below these, around these 150.25s ish, which you can see it's been a very key area right here, double bottom low in here. If we do offer and hold below that, then potentially we could start rotating and filling in a lot of this really low volume that we left behind. And just potential for it to just rotate and hold that. Now, if we do break this and then can actually hold an offer below here and actually use these high volume nodes as these 150.45s as an area to rotate to the upside, well then potentially I think maybe we could find some scope to breaking above these areas. Now remember, above these 151.24s to 26s, well, 30-ish, which is really the high that we made on Friday. We don't really have a lot of volume above here, really until we get into this area where we were trading before the ECB came out. So really up until this region is not much to be looking at. We do have a 50% of the recent move down from this swing high here. That 50% all the way down to that swing low we saw in here, it comes in at 151.68. And we see just a little bit of a high volume node there. So that could be interesting. For me at least, I think it could be quite interesting. Although, I give it a bit of a berth up until this swing low that we see in here around 151.75. So, looking at that area possibly for a bit of an offer, but again, potentially, we could make our way back into this. If we do make our way back into this area, um, you know, maybe the higher volume node of this region could cap us. But then again, um, you know, a move back into this region and a rejection, we could see a bit of a filling in here because it's just been a very, very low volume traded area. And if you take a look on the market profile, you'll see just how low the volume is at these prices. 1,000 contracts here, 430 contracts there, 300. It's just very, 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 very thinly traded. So as we're looking at this market profile, the value area high of last week comes in at 151.26. We've got the selling tail, well, basically the high of last week at 151.30s. There's a coincident value area there at 151.23, which held us for a bit last week until we just managed to smidge our way through it just a little bit. So initially, I'm looking at this area. Obviously, if we can hold an offer below this area, then there's obviously a large potential for us to rotate and test and come back into this VPOC region, which comes in at 151.46s. That also is pretty much our POC, our point of control, and the volume point of control. So there is probably going to be quite a bit of weight on the market for this area. Again, if this area is holding initially, then like I said before, we could be trying to tack to the upside, but then ultimately that area is the area you want to be looking at for any potential sellers. And then the value area low of that week comes in all the way down at 149.38. Mind you, we do have a bit of a, like I said before, if you saw on the 60-minute, the composite volume, there wasn't composite volume, but the volume that we saw from last week, you can see there's a bit of a cave in here, and on the market profile, it's really quite apparent, all the way down into these regions. So for me, if we do start offering below this VPOC, we get below, like I said before, those 25s in here. You can't really see it on this profile, but on those swing lows on the 60-minute, if we do start offering below those 25s and just make our way down, maybe we'll start repairing a bit of this profile because we've left a lot of low volume in a range that we've been sitting in for the past 2 weeks. So potentially we might want to start auctioning that off just a little bit. Obviously, if we do make our way to the downside and break below these 149.38s, I do think that whoever's bought this area here, which we were noting was a massive 38.2% fib, might start feeling a little bit nauseous just because you don't really want to see it come back and test you that much. We saw a really nice auction off this area. We saw a pretty big change in the price character because the way we came down here, that the buyers were just so much more aggressive in here than the sellers and just took everyone out. So if it's coming back into these areas, I think, some of those buyers might start getting a little bit into trouble. But like I said, it's gonna take an offer that can withstand and hold below these 149.38s before we can see that recent low that comes down at 148.23. Ultimately, just below, 24s, just below those 24s, 23s. Is those 21s, which was a high volume node. Through there, then we're going to have to start looking at our composite, and I'm sure that Dan or Simon or Lee, whoever's going to be doing the streams this week, is going to be going through those levels. I'm primarily just looking at it from a top-down approach, not looking too granularly, just to take a look at where we're trading on the week and how we could possibly trade that. Obviously, like I said, this key area, if we do get above this, you know, low volume all the way up into this region, um, you know, really until we get up until these areas, 152, 15, 16s, which is the 50%. There's no real solid, solid reason to be getting too involved. Just before there, we've got the 50%, which you might want to take a bit of a dab at, a dabble at. But this is a very low volume region, so you could see a very big rotation through this, very quick rotation through this. So just bear that in mind. Obviously, we do have a pretty decent structure. So let's move back to my small presentation there, so we can just go through some of the event-driven risk, because really that's where all the opportunity lies, is on Wednesday and beyond. So let's get through this Tuesday. We've got German CPI. That's a final reading. UK CPI. It's a prelim reading, so that's going to be quite important. We've got the German ZU expectations, so look at those for, well, potentially for any moves, but that's been kind of simmering away in recent, well, over the past year, really. It's just slowly been losing its shelf life, but just bear it in mind, it is a leaked figure, so if we do see any strong moves prior to the number, bear that in mind. U.S. building permits, U.S. housing starts also on Tuesday. Central banks, we've got RBA June meeting minutes, ECB's Merchant, ECB's Novotny. That's a hawk and leaning hawk respectively. And on the geopolitical front, mostly looking at any comments regarding Greece from the EU, EU's Moscovici, and the EU's Hill. Taking a look at Wednesday now, our busiest day of the week. We've got the UK ILO unemployment rate and the average weekly earnings, so definitely keep an eye on that. And if we take a look real quickly at our cable, this is the cable chart as it stands at the minute. We've seen a little bit of a bounce in recent trade. This is a daily chart. You can see we found a bit of support here around these, well, 151, 45 to 68 region, and here we've seen quite a few swings just in this little region in there. We just kind of made our way. We repaired this gap that we had in the market. We repaired it for a couple of weeks. And now we've just made our way to the upside. We're currently now closed above these 155 50s, which was a really key little area, and especially basically around these 155s, which we've been looking at for quite a while. We couldn't really close for a while in this area above these 155s. We saw an offer through here, which brought us to that swing low. We saw an offer there around the 154.78 mark. And now we're just above there. Now, we could be auctioning in this region, which we've seen very quick auctioning. So bear that in mind. We're in this kind of value area zone, so we could start seeing, the short-term risk for me is to the upside, to test these 156.99s and potentially up in here. We see bit of resistance again. That very nice level of 158.22 is held. We've seen it in the past. We've basically double topped at that little region. And then the next level there is 159.48. So potentially looking, if we do get any better than expected CPI numbers, then we could see a strong continuation in the bid, as that's going to coincide with the technical outlook. The fundamentals are going to, coincide and have decent confluence with the technical backdrop. So just keep an eye on that. That could be quite interesting. And obviously, if we get any, I like from a technical perspective, if we get any very small misses, where we small miss in the CPI, we get a bit of an offer in the cable. If it has maintained its bullish structure coming in to Wednesday, then you could see some small opportunities to buy the currency up. But that's really largely going to be depending on what the structure looks like come Wednesday. Obviously, a lot can change from now until Wednesday, but just from the way it looks right now, it looks like the short-term risk is to the upside. Moving on Wednesday, we've got the European CPI. That's a final reading, and then finally the US DOE crude oil inventories. We then have the BOE release of the minutes. So again, that's going to be really, really crucial. The minutes together with the ILO unemployment rate, again with the minutes, if we do get any sort of votes, because we did see the last minutes, it was kind of 50-50 for two members. So if we actually do get a couple of votes from the May minutes that were in favor of a rate hike, I think there's good potential in this cable to rally, especially with the backdrop of a bit of dollar weakness recently. Just bear that in mind. Obviously, just also bear in mind we've got a major risk event on this day, the FOMC rate decision, which comes in later today. So any moves possibly in the dollar might be a little more muted. So I'm not looking for any massive continuations, but just really short-term plays, because I think that the moves might be a little bit muted coming into the FOMC rate decision, because that's where the real risk event is. And I think a lot of the market participants are paying attention to. So I'm not going to go through the nitty-gritty behind the whole FOMC um, FOMC rate decision and the SEPs. I'm sure Brannigan and Imran are going to do a really good rundown, but I just wanted to go through just some tidbits that I think are quite important, the market structures that I do really like, and effectively where the market's priced. So if we take a look at the minute, the current market pricing according to the Fed Fund futures in September, the September 15 contracts are basically giving us about a 32% chance of a rate hike. The DEC 15 are giving us a 69, basically a 70% chance of a rate hike, basically until the end of the year. And then the Jan 16, um, the effective implied probability of a rate hike by then is still 82%. So there's really not much change between DEC 15 and Jan 16, like a whole year's difference. We're getting not much change at all, about 13% difference, which is, for me, I think that is really, really key for me. And that's why I think I'm really going to be looking at DEC Jan 16 contracts, the euro dollars, to trade, and to be looking at as a very big bellwether for the rest of the markets that I'm going to be trading. Effectively, if we do get something hawkish. Now, obviously, we've seen a very big discrepancy between what the Fed have been effectively telling us and what the market has been pricing in. Just to put this into perspective, by DEC 15 from the Fed dots, we were looking at, if I'm not mistaken, the median Fed funds projection was 0.625%. That's effectively price for them. That's already a projection of 2 rate hikes between now and the end of the year. And we're seeing the market price in only a 70% chance, 69% chance of 1 rate hike. So just to show you how wide the difference is at the minute, still a pretty wide difference, even though if you look it up online, the retail environment, even some of the banks are somewhat, looking at base case scenarios of a rate hike in September. Even the market chatter is starting to differ from the market pricing, which is just really strange for me. And I think that effectively could give us, a rise in some good, really nice opportunities if we do get something concretely hawkish. In the scenario that we do get something such as something a little bit more concrete that makes us know that the rate hike is coming this year. Because we've heard some comments already from some of the Fed officials that they're looking at this year, and basically we do know from the projections that about 15 members are looking at this year. But can we get something a little bit more concrete that makes us know that by December we're getting a rate hike? If we do get something concrete, whether it be the dots or something in the statement that tells me that we're getting a rate hike more likely than not by DEC 15, I want to trade the 16s, because even though it's going to be said, I think this could effectively move to 90, maybe 95% if it's a really strong indication. But if that's the case, then the 16s really do have to go push through 100%. So that's something, a scenario that I like in my head. And just taking a look at some of the market structures, we'll see that effectively um, it does kind of make sense. So first of all, I want to take a look. I mean, the dollar. I just wanted to take a look at it just as a backdrop, not something I'm particularly looking at trading wise, but just something to just keep an eye on. Obviously, if we take a look at the dollar, we've seen a bit of weakness in the last 2 weeks. We've pushed a little bit lower. The main levels, obviously, for me, the recent swing high there at 97.70, 77.5. This is not looking as good because if you look at the Euro USD, the Euro USD is actually building a pretty big weekly inverse head and shoulders. This doesn't look as good on the dollar, as in the left shoulder is very, very small, the right shoulder is a lot bigger. Um, so just I think that's something just to keep in mind. One of the major levels that I'm looking at and I've been talking about for a bit of time now is these 92.18s. Well, 92.63s down to these 92.18s. These 92.63s, if you look on a monthly chart, is a very, very big level. Very big level on a monthly going back years and years and years. And effectively, as long as we're holding above this level for me, I still feel medium term this market is bullish. And then 38.2% fib from the recent swing that we saw in here, basically the swing there, comes in, 92.18, we get a 38.2% fib. So this little region for me, we did kind of get a bounce just short of that. But still, if we come into this region for any reason, if anything's, obviously if we get something dovish, but not too dovish, um, and we do make our way to the downside, and if we find a bid in this region, I'm looking potentially to sell whatever it may be, euro versus the USD, or the GBP versus the USD. But just bear that in mind because this is a really strong area for me. If we're finding an offer and we close below that, I think that could be a big signal. And then I think potentially, we're looking for this market to trade down to this 50%, which is again a very big level. This 89.62 is a pretty decent swing high on the weekly. I can't show it to you now, but if you look on your weeklies, you'll see it's a pretty big swing, and the 50% comes in literally just 4 ticks away. Sorry, 24 ticks off that level. So just bear that in mind. It's a pretty decent little area. If we're through here, I'm looking for this potentially not all at once, but in maybe a week or a couple of weeks if we do close below here, for this to move down lower. But if we're holding this area, I do think you know we could get a pretty big bounce off of this region. This could be an area that still you know some higher time frame participants been waiting to trade. So just keep that in mind. Now, looking a little bit at some of the other markets, and I'm looking at the euro dollars, the DEX 16s. Like I said, I'm looking potentially at this market because effectively, like I said, if we do get something hawkish, something that is giving us a bit more, um, something a little bit more concrete, that September, we do, the market is kind of expecting that September we're effectively live. But if we get something a bit more concrete that, wait, guys, we're actually looking at September to do something, um, I think we could get some aggressive pricing on the DEC 15s, and the DEC 16s might move even more because, if a rate hike's being priced in basically by the end of the year more aggressively by the market, I think further out down the curve we're going to get some aggressive moves. So looking at the structure of the DEC 16s, you'll see this is a trend line that I've drawn in going back. Obviously, it was drawn in a little bit here, but I've just pulled it out a little bit. You could have drawn it connecting these two swing lows in here, but I connected to this swing low in here because it paid attention to it here and in here. We saw that little bit of a false break in here, which then effectively we had that massive move in October through this really key level at 97.435. And then at the minute we've closed below. 2 weeks ago, um, we closed below this pretty key trend line, and we've now have an inside week from last week trading below this trend line, which I really do like because I think the short-term risk for us is to the downside. being as we're below this pretty key trend line. We've got an inside week, so potentially if we get something hawkish, I'm looking if we find an offer below these 71 and a halves. I'm looking to offer this market lower and potentially, if it's something big, I think we can see this, trade 97,435 or maybe even through that. So just bear it in mind. This is just a nice little structure that I like to see. Obviously, I would be looking to get out in here, but if it's something bigger, um, I'm open to let this one push through this area. Uh, Obviously, if we do get something quite dovish, the same thing applies because we do have that inside weak structure, and if we do get back inside this trend line, I think again anyone that's short below here could cover. So on either side, really, I don't want to be looking just from the bias of a hawkish, something hawkish, but something even pretty dovish that puts a rate hike in 2015 out of the picture. Well, then similar, a very very similar trade applies. I'd probably be looking more so at the deck 15s because, um, well, then you can, those are probably going to price in a little bit more aggressively um, than the deck 16s. But then again, I'm looking more if we do get something hawkish. I'm looking to trade the deck 16s if we get something very dovish that puts possibly a rate hike out of the picture in 2015. I'm looking at deck 15s. Taking a look at the next market, and if I'm not trading this market, I'm probably looking at this US 5-year. The 5-year, and I know I've been talking about this market for just months and months, literally throughout all of 2014, really. We were talking about this market with Alex Haywood, and I feel at this stage, where it's such a critical point, um, that again, if we do get something, just a sliver of something really concretely hawkish, I think this market has really good potential to push higher in yield. And this is a yield chart, just to make this clear. This is a weekly yield chart. You see, as we're taking a look at this chart, the really key areas for me, we've seen these 1.8%, basically 1.806, just where that level whereabouts. We've seen it at a swing low in here. We've seen it swing high in here and here and here. Again, just short of that in here. And again, last week we held it in here. So if we find some sort of offer in the market that lifts this yield through these areas convincingly on something concretely hawkish, I think there's really good potential for this to push. And if I'm looking for a push, I'm looking for a really good push. Last week alone, or 2 weeks ago, sorry, we saw a double inside week just in here. The break of that took us, literally from just short of 1.6 all the way up to almost about 1.8%. So if we're looking at a breakthrough here, I'm not looking just for this market to trade 2%. I think it can trade possibly 2.2%. So, uh, you know, that could be about 30, 40 basis points worth of a move. So it's been coiling, it's been moving in this really tight range for a very long time. Something concrete, I think this could be a really good scenario. Um, Obviously on the contrary, if we're getting something dovish, something like I said before, something that's concretely dovish, and it's up to you guys to find what's concretely hawkish and concretely dovish. Pick those scenarios out and trade them. But I'm just looking purely on a technical basis. Something concretely dovish, I'm looking if we can offer and hold below this pretty key trend line in here, which we've been holding. We've just been converging in this little bit of a range in here. Offering below that, then we could see a bit of a puke for anyone that's been recently positioning short the market. So this is just a reminder: is yield. The yield is inversely correlated to the price of the bond. Right. That is the 5-year. I think I've gone through a few of the scenarios. I'm running a little long on this, so I'm going to try and wrap this up quickly. Thursday, we're looking at the UK retail sales and the US CPI, the CPI core out of the US. So definitely keep an eye on these. Um, I've seen really big moves on UK retail sales if they're really out of line, so just just mind you. And again, US CPI, that's going to be pretty key. It's probably going to be a little bit on the back burner if we do get some really big moves um, um, out of, you know, just out of the Fed, and potentially if we do, we do see something that's a bit muted out of the Fed, then I think more focus is going to be on this, particularly if we get, a really big or very low number. Um, Obviously, the bigger numbers, we're looking at potentially sooner rate hike and vice versa. We've got the US leading index and the US Philly Fed also on Thursday. And then just really quickly, we've got the Swiss SMB 3-month LIBOR target range on Thursday. So basically, the Swiss National Bank um, meeting. Now, I don't usually put this up, but I'm putting it up only because the last time we saw them do something really big was just before the ECB did QE, um, and it was also during a time where Greece was actually pretty much on the forefront and in the headlines. So I think they had two risks before, um, coming into that meeting on January 15th, if I'm not mistaken. They had two risks, basically Greece, and they had the ECB potentially doing QE, and they basically didn't want to have to, you know, hold the SMB, the Swiss currency down, the Swiss franc down for that long. And as it stands right now, I think you know, if they don't do something, potentially, if they don't do something, this is obviously a big caveat, potentially, and Greece does escalate to a point where they default or, something, a big risk event takes place where Greece turns into a nightmare, effectively, um, and the euro just collapses, and we see, the Swiss franc just strengthen even further. Something that they don't want. They want the Swiss franc. Um, they want the Swiss franc quite low because, uh, you know, they just otherwise they're just gonna have too high, uh, too high of a currency, and at the end of the day, their largest exports go to the rest of the eurozone. So that's just gonna hurt their economy. Um, so really, if we do potentially get something, I'm looking at potential for them to, have a surprise interest rate cut, just because, just as a safeguard coming in. Obviously, the 30th of June is the big deadline for Greece. Everyone's going to be looking at. So I'm just keeping an eye on it. Looking at the chart, the Swiss franc versus the U.S. dollar. So you can see the Swiss franc strengthen here. Obviously, the dollar moving lower versus the Swiss franc um, quite a bit in this region. And then we've just since then have just been, we had to move all the way up, practically touch that area where we started from, and we've just been kind of coiling in this region now. I'm just, we've just coiled down into a little bit of an area. So potentially there's a little bit of coiling, something decent, um, whereby if we do get a bit of a rate cut, you know, we could see, this market just find a bit of a bid higher as the Swiss franc weakens with that. So just bear that in mind. The key areas to be looking at these 94.77s. We had a couple of swing lows in there. We haven't really been able to hold a bit just above there. That's a little key area, and then just above that at 98.16s, and then obviously all the way up to that really big swing high at 10224. Just below that, we're seeing that swing low here at 92.16s, and then those 90.65s just in there. Just keeping an eye on this. Obviously, like I said, it is an outlier event, but something just to keep an eye on potentially. It could be something to trade. Then we've got the Eurogroup in Luxembourg, so just keep an eye on that. Potentially, we could see some more comments out of that. We're definitely going to see more comments. So just keep at your desk, stay there, be prepared, know what you're going to hit, know what you're not going to hit. And like I said, if it's something big, hit your size all first, and then decide what you're going to do. Take the risk on because you're getting in the Eurostoxx, you're getting 30, 40, 50 ticks sometimes on some of these moves. And you can get serious size away in that market. So, keep it in mind. It could be something really interesting. Come Friday, we've got just on the data point front, we've only got the Canadian CPIs and then the BOJ's Kuroda releasing his policy statements. We've got the BOJ, basically the BOJ's meeting on Friday, early morning. Uh, Basically looking out for any comments on the yen. We saw last week the Kuroda basically said that he's not seeing any more scope in the yen depreciating any further. Just want to see now what those comments are going to be. Effectively, no one's really expecting any sort of easing, but you know, whether he retracts those comments or kind of plays it back or plays it down a bit, or if he really reinforces it and says, honestly, guys, we don't see this yen going any further, and then the market's basically going to start pricing in less probability of further QE, of further easing, which at the current CPI levels, the market doesn't really believe that they can achieve their inflation target without doing more easing. So, effectively, if that comes out, BOJ is basically going to be saying, the market's in the short term, medium term wrong, and we could actually see this dollar yen offer back into these areas. So if we take a look at the way the dollar yen is shaping, last week we saw this a daily chart. We saw the big move to the downside of those Kuroda comments. We've now seen 2 inside days. So the risk is that we could see a pretty decent move now. The really key area is, we've got to swing low at these 122.43s, but the really key area is these 122s, basically the figure. I think that area is pretty key. We've got the really long-term trend line in there. We've got the flag top just around that area. So if we're holding above this area, we're bullish. If we can offer and close below this area, I think we're short-term aggressively bearish. Because anyone that's been long in here is going to have to cover really aggressively. We could see at least 119s and I think even 117s if we get a really sustained offer below these 122s that holds. On the contrary, if we're holding above here, I really don't see why you should be getting short. If you're holding above this area, and we start closing back inside this range, even after the meeting, I think this market's still pretty bullish for me, short, medium, long term. Okay, what else we have on Friday? Just to wrap this up, BOJ's Nakaso speaking again, similar thing. Just keep an eye on the same yen comments. The Fed's Mester, non-voter and leading hawk, and then obviously the ECOFIN in Luxembourg. So again, keep an eye on the Greece comments. From a risk and money management plan, very, very, very important, guys. If you want to be in the game by Wednesday, save your money. Monday, Tuesday, keep your chips at bay. Trade the markets, obviously, but you don't have to be too aggressive, too crazy. I'm putting in about 10% risk allocation each for Monday and Tuesday. Wednesday, I feel there's the most opportunity. I'm putting about 40% of my risk on that day. I don't usually put so much risk on one day, but I feel it could be if we get something concrete, and that's only an if. If we don't, you have to trade accordingly and lower that risk allocation. But if something big comes out, you know, make sure you're trading it, make sure you're prepared for it, because the way the market's lined up now, I think there could be really good scope. So that for Wednesday. Thursday, about 25%. Obviously, we do have a couple of risk events around there. And then Friday, about 15% of my risk on Friday. Again, this is my risk and money management plan. It's going to change from person to person, so make sure you make that your own. Thank you very much for listening, guys. I won't be doing all the debriefs for the rest of the week because Brannigan is back, so I hope you guys enjoy all those debriefs. And I will be back with you guys on Friday doing my weekly market wrap. Thank you guys very much for listening, and hope you guys have a very profitable and good trading week. Bye bye.